Today I will be presenting a brief audio report on Maithan alloys. By the end of this audio report, you will get to know 5 insights which you did not know earlier in this company. Maithan Alloys is among India's leading manufacturers and exporters of niche, value-added manganese alloys. The company has emerged as a reputed provider of customized manganese alloys to large and growing companies the world over. Insight number 1, market share. Coming to market share, Maithan Alloys has 6% market share in ferro alloy segment. Insight number 2, revenue mix. Coming to the revenue mix, 95.3% of its sales come from ferro alloys, 1.2% from manganese ore, and 3.4% from others. Insight number 3, location-wise breakup. The company's sales are concentrated in the following segments. 24.7% of the business comes from India and balance 75.3% from the rest of the world. Hence, the company is heavily dependent on exports for its revenue. Insight number 4, asset breakup. An interesting point to note here is that 100% of its assets are concentrated in India. Insight number 5, sales growth and profit growth. The company has had remarkable sales growth and profit growth during the last 5 years. The company has achieved an outstanding 5-year sales growth of 20.02% and a remarkable EBIT 5-year growth of 63.28% dividend yield. At current market prices, the company offers a reasonable dividend yield of 0.63%. ROE and free cash flow. The company has achieved an outstanding ROE during the last few years. During the year 2022, the company achieved an extraordinary ROE of 42.55% in the year 2022. An ROE of above 15 indicates that the management is using shareholders' funds effectively and generating a good return on investment. Also, the company has had a positive free cash flow in 4 out of the last 5 years. This indicates that the company has surplus cash profits for internal growth or expansion of the company. Pledge. Also, the company has zero pledge. This indicates that in a bear market, there will be no panic selling by both FIs and DIs in this stock. Valuations. With a price to sales ratio of just 0.80 times and P ratio of 3.21 times, the company is extremely undervalued. Market return. With a 10-year positive return of 1,495.97%, the company has significantly outperformed the Sensex, which just gave 220.13%. If I were a long-term investor, I would check the commodity prices and wait for the company to report good quarter results, and then only I would keep the stock in my watchlist radar. For getting more such research insights and in-depth stock analysis, please join our Stocks Made Easy group. Thanking you from team testmystock.com.